We're back. Day 11 of this thing. Do you think they're ever gonna get retired? Do you think they're ever gonna get retired? I don't know. It's day 11. They're still not retired. I want to go over this price action. I wasn't able to go over it yesterday, and yeah, I'm gonna go over it, annotate it, and then yeah, then we'll see what happens after that. But yesterday we had a big sell off. We had a big sell off here after we obviously went up, took buy side liquidity taken. Then we have a fair value gap in, fair value gap out signature. What type of order block was I monitoring? Wow. Look how we delivered to that. What type of order block was ES at? ES was at an order block. I remember. Oh, look at the bodies. NQ is very weak. Look at the liquidity that we refer to. Oh my gosh. Oh my gosh. I never really used regular trading hours, but I mean, they definitely got used today. It definitely got used today. Previous what is this? Low-key inversions are actually kind of tough. They're actually tough. price breaks down. Whew. 75% a wick. Wick acts as resistance, repelling price. Oh my gosh. Beautiful signature. Beautiful signature. We are still weak and not done yet. We break through the new day opening gaps. I do kind of like that gray. What is this? So that regular trading hours. Previous opening range gap. What time is this occurring? 10-15 macro. Do we have an SMT here? I feel like scalping, in line with the current order flow. No, not there. Not really. Wow. Wow. Notice how buy side and sell side are like equally distributed. That acts as a balanced price range. Pretty much just a 930 reversal. Oh! The inversion is kind of nasty. $40 right there. 40 points. Yo, what's good? How we doing? How am I doing this morning? Just doing some back testing from yesterday. Because I wasn't able to do that. Gonna mark out 1150 macro. We keep on just disrespecting these bullish imbalances with bearish imbalances. Is my new day opening gap working? Oh yeah, we have just very small new day opening gaps. Was that 130? Oh, I don't have it. I probably don't have it on this one. All right, I kind of want to just record a little market review. Good morning. How we doing? How we doing this morning? I just went over this log. I'm gonna record these annotations real quick. All right, welcome back to another little market review. As always, these are just my interpretations on price. These are just my annotations. Let's get straight into it. And as you see, on this day we had CPI. CPI actually came up and we manipulated price higher, and we immediately inversed that with bearish for value gaps. And it seems like throughout the whole day we just have moved higher with manipulation for value gaps, so we just end up inversing them with real fair value gaps. Within the morning, I was thinking that was possibility that we could get a run on buy side here, but as we can see, this bullish order block fails to hold. We then end up displacing. We then end up respecting this fair value gap, showing initial signs that the drawn liquidity is likely actually lower. So as you see, we form SMT here and SMT here. Notice ES is underlying strong. ES is so much stronger here, and NQ is a lot weaker, and that's therefore we sell off a lot. We have a more explosive move on NQ, and as we can see, this 2-minute fair value gap. Look at the bodies respecting that perfectly, and notice here these two down close candles in that new day opening gap support price initially, but 1, 2, 3, 4, 5, 6, 7 times or 14 minutes we're within this order block. That is not so much of a bullish signature. Usually when we see an order block, I want to see quick and snappy responses. This is more just manipulation. This more is just showing the underlying sentiment might be bearish. And as we can see, we end up falling off. And here's that 950 macro as noted here, SMT. And then let me pull up my other annotations. I wish I had this on a slideshow, but what I did notice today is that we have this opening range gap. And look at the liquidity that we referred to today at 9:30. IPTA, since we had a big manipulation move, referred to this gap right here. Look at that. Look at the bodies. Look at the bodies. We have an order block right there as well. And then boom, we displaced lower. Immediately inverse this fair value gap right here. We put in a short-term bottom like this. This is not going to be the bottom. This is just for us to retrace up into a premium here. Then we end up breaking down here. We have an immediate rebalance right there. And then price just ends up falling out of bed here. And then here is the 1050 macro. And notice how there still could be opportunity even on these large down close candles when it feels like we've already had the move already. But look at constant encroachment of this fair value gap. We respect that perfectly, showing that, hey, that we still likely have some more expansion possibly to the downside. As we see, constant encroachment holds. We then get a fair value gap right here in line with an order block. We can now trust that since we've seen a bearish signature right here. Then look, we get another fair value gap right there. That gets traded to as well. Then we end up going down to previous opening range gap there. Oops. And then here, this whole range, we've had buy side delivered, and then we have sell side delivered. Notice how we have fair value gap in, fair value gap out. This acts as a balanced price range. We have an inversion right there, and then we also have an inversion right here. Notice how this just gets respected. And this here, I don't have it on this chart, but it should be on the previous chart. But notice how I guess they're not showing up, but we're displacing through two previous new day opening gaps here with a fair value gap here, a 5-minute fair value gap. Notice how that gets traded to. This whole area acts as a balanced price range, and there's still opportunity. And look here, we have another manipulation higher, breakdown, fair value gap right there, in line with this inversion. 40 points offered there. 40 points right there. Like, that is more than enough right there. And then this right here is 80 points from this low to high there, or high to low there. And then lastly, we have the end of the day session. See, we have the 1150 macro, the 1250 macro, and then the silver bullet hour. Notice how we drop into a deep discount here. Here's that 130 opening price. We're in a deep discount at 2 p.m. silver bullet. We then end up getting displacement higher. We have a fair value gap right here. Gets respected nicely. We have another fair value gap right here in line with a mitigation up to buy side. This right here. With that previous new opening range gap, which pretty much is a new day opening gap. It's a little bit different. Ends up getting respected perfectly up to buy side right there. And as you can see for the rest of the session, we kind of just meander around, head back to that previous range gap, opening range gap. And yeah, those are just my interpretations, and I will see you guys in the next one. Alright, I'm going to upload that. It always takes me to ICTs. No, that is crazy. Dude, I'm so glad I switched my chart colors. I think my chart colors are just so much better now. Yo, what's good, Bit Bop? I don't know if I said something. I think I said it in my head. That's what I do a lot. I'll say stuff in my head, but I won't say it out loud. I do want to pull up this one guy's Twitter because he had a post that I want to go over. We're above weekly open. Oh, that was some sauce right there. All right. All right. Yesterday's action went over. I do want to see that opening range gap he's talking about. So this is the remaining portion of that we left unfilled. I do want to make that gray. Why not trade Forex? Personally, I live in the United States, and I don't know, it just makes sense to me. I guess I could trade New York on. I was like futures. All right, so today we're now below True Week Open. I don't know. I think we could just have a small range day today. That's kind of what I'm expecting. Large range will create small range.
It would make sense for them to run the buy side.
Chart right here.
I do want to finish this. Damn, bro, my nose.
Accumulation can only lead to expansion in the direction of order flow. I'm going to call that OF. Therefore, any accumulation that looks to reverse, right, is going to be a manipulation followed by an expansion in the direction of order flow. Okay? And as we can see, that's the thesis for why I took this trade. Now, that's not immediately obvious in all cases, right? However, there's a lot of people who might also be saying, well, look, we're inside of this hourly SIBI, perhaps we're reversing in here, correct? Well, as you can see, the minute we put in this accumulation inside this hourly SIBI, I now know that this hourly PD array did not lead to a reversal in order flow, as you can see here. We expanded into it, right? Expanded into it, and then consolidated. Had I seen us expand into this inefficiency and then reverse, then I wouldn't have minded seeing a consolidation lead to another leg lower. That would be absolutely okay, because consolidation, as you see here, in this case, would be bearish consolidation before another expansion leg lower, because we already had the reversal inside the array. However, because I did not see us key off of this 1 hour SIBI, I knew that this manipulation lower or false expansion was nothing more than inducing shorts in the market. As you can see, A, M, D, X. Now we also had the benefit of understanding the time frame this was occurring around. As you notice, this was happening. I'm going to go to a 4 hour chart right here. This was happening around the same time that we were creating a 4 hour inefficiency, our H4 sell side imbalance, buy side inefficiency. So I had a suspicion that the 2 p.m. power of 3 move would look something like this, right? Accumulation, manipulation, distribution, and then 2 p.m. onwards would give us our order flow reversal and our displacement towards sell side objectives. Remember, I'm bearish on the day still. However, seeing this opportunity present itself, right, and seeing that we had formed a 4 hour fair value gap right about the time, I'm going to mark off our 2 p.m. candle, right about the time that I saw we would need to retrace it after this manipulation lower, allowed me to directionally play this move, right, as a scalp in the market long. And I have this video on my Twitter posted here about how I'm specifically fading this fair value gap. I'm expecting this fair value gap to act as an inversion or natural support level. As you can see, we come in, accumulate in here, expand through, use it as a resistance, or in this case support, right, natural support, and then expand into our 4-hour gap before sharp turning and reversing quite promptly. Again, accumulation, manipulation, distribution, and then X is our reversal, right? I have all of this on my Twitter as well if you guys want to refer to it after. So here is a really interesting kind of thing you could journal for the day, in which understanding IPTA market cycles really helps you in not being induced into these shorts and instead catching a long opportunity in here. The last thing I want to cover is how I used standard deviation projections on my long trade to actually find a level inside of this 4-hour SIBI where I wanted to take partials. So let's do that next. So at the moment, all we understand is that I traded long, right? And the execution's on my Twitter, right in this area here, targeting this 4-hour gap. So I targeted this high right here, right, which was the low of the 4-hour gap that was created, and then I got out of my long trade again. I'm not going to go through it on this video just because it's getting a bit long, but it's on my Twitter, and feel free to ask me any questions you have in the comments or through my direct messages. Now let's take a look at how I approached finding a target in here. What I used was, I'll go back to this chart. What I used was actually the wick of this 4-hour candle. So I'm going to get rid of some of the stuff on the chart here, and I'm going to show you, do you see this wick right here? This candle, again, let's remember, forms our SMT. So this is responsible for our SMT with ES. And again, if you've seen my standard deviation lesson, you know that's where I like to look for my projection levels. So seeing the SMT form in this area, I'm going to use this wick, right, as the level that I'm projecting. Now you might ask, why am I using the wick? Smart money is accumulating inside the wick. Smart money is an active buyer of the market inside the manipulation of this 4-hour candle, which is the SMT level and is this wick. Now on a lower time frame, right, you can see that to be this level right in here, right, that we eventually end up reversing from. So what I do is I take my Fibonacci projection and I drag from the low to the open of this 4-hour candle. Again, this is something that Dexter Lab on Twitter has lots of information on, and on YouTube. So if that's a little bit unsure, check out my standard deviation projection lecture. Also check this guy out on Twitter, and there'll be more kind of justification for why I'm using this wick. Now, as you can see, if I just expand this out a bit and I add some backgrounds, where is the level where price reverses from then in the PM session? I have a really, really nice target. I'll make this nice and dark for us. You see how price comes directly into this 2 to 2.5 level before keying off and moving lower? Smart money was active in this wick area down here, and they brought price up higher. Now, where are they bringing it to? The natural reversal level, which is 1 to 1.5. Here's the other confluence I had for long. Do you see how we have this silver bullet reaccumulation zone? Well, this is precisely where This is exactly where I decided to get long in after seeing this manipulation lower. I saw we were inside a likely reaccumulation zone, so then all I had to look for and see was, what PD array can I frame that around? Well, look at this. Inside my reaccumulation zone, we printed a new hourly BISI, buy side imbalance, sell side efficiency. So as you can see, when price manipulated into it, inside this zone right here, my silver bullet reaccumulation zone, right? 6 a.m. accumulate the news, and again, I love here how I approached confluence of the 1 minute target as a in this 2 pins with a bearish distribution with no wick, and that's where I can go down to the lower time frame, in addition to a bit of explanation on IPTA market cycle.
All right.
Here with experience.
I'm lucky gonna grab some food real quick.
Into London or tomorrow morning. The only imbalance is if you look in the daily chart on January 11th. Yeah, I'm not going to have dialogue with that because you bring nothing to the table. So I want to try to keep things.
I'll be right back.
All right, folks, welcome back. So we're looking at the E-mini S&P. This is our daily chart here, and I'm zoomed in kind of tight, so I want to go over a brief outline of the daily range, what I was expecting and what was likely to transpire and what actually did transpire. Before I get into this, obviously the longer I do this, more people are going to come to the Twitter account that I'm managing, and they're going to come to the YouTube channel that I'm managing and listen in on the live streams that I'll be doing in February and throughout the rest of the year. And they're going to come with their preconceived ideas and their disciplines or lack thereof, and they're going to come with their opinion. And they're going to say, after the fact, after the market's already done whatever it does, they'll come in the armchair quarterback and say, well, everyone would have known about this, or everyone can see it was obviously this, that, and the other thing. These same people don't have anything that they've executed on, or they'll show a video with results that were not recorded as they were doing them. And to me, it's a little disingenuous. I'm out there trying to point to certain things, and you, the viewer, are encouraged to go through your charts and watch and monitor it the best you can. So, when I get folks that do that on my Twitter account, I just mute them. So I don't get to see anything else they get to say, because I'm not going to have dialogue with that, because you bring nothing to the table. So I want to try to keep things moving along this year and keep things on the focus. So if we look at the daily chart here, I have a high noted, and that high was a potential target today. The highest up close green candles closing price, that being right here, that was also an intraday target. And then we have this wick here. We split that in half. That's a target. This is a target. This wick here, split that in half. They're consequent encroachment objectives. But this closing price here is a rejection block. This drop down with this candle's low, this candle's high. This is a fair value gap. Its classification as a fair value gap is a SIBI, sell side imbalance, buy side inefficiency. The market trades up, leaves a small portion here on Friday, and then we have new week trading Monday today. And I'm taking my attention back through this candle. Okay, now folks, listen, because there's a lot of folks out there that like to say what I'm teaching is a relabeled version of supply and demand. It's neither supply and demand or classic support and resistance. Here's the thing that you need to understand about what I'm teaching. Supply and demand, and their supporters and people that promote that idea, will say don't cut through candles. They want fresh zones. Okay, I don't deal with zones, I deal with specific levels. And I'm cutting through this candle. I'm looking past it. I'm going right back to this candle here, which is what I taught on last week. Midpoint of that is consequent encroachment. 39.82.5. Okay, so that level, I'm going to project that through. Now what I'm showing is the look back with PD array matrix. So we're looking at specific candles looking back in time, 20, 40, 60 days. So the highest form of sensitivity in these key levels are going to be within the last 20 days. After 20 days, the market may respect those levels. I'm more specifically aiming at newer PD arrays within the last constant 20 days, look back. So the range of the last 20 days is what I'm basically focusing on. So key levels, that would be fair value gaps, order blocks, breakers, institutional order flow entry drills, consequent encroachment, mitigation blocks, all those things, rejection blocks, old highs and lows, they're going to be salient to my preferred setups. And we're looking for that in my specific market. So right now I'm obviously focusing in on even the S&P. So that idea, that midpoint of that gap, that was the focus of what I was looking for this morning. And I started the day with giving you a chart on Twitter. And you can find my official Twitter account on the YouTube channel. Go to the main page, look in the upper right-hand corner, and you'll see that is the official ICT Twitter account. If you're not finding it from that link, you're probably watching someone else that's not me. Okay, I'm not going to sell you anything. I'm not going to take you to a Telegram channel. I'm not going to invite you to a Discord. I don't use WhatsApp. So if we watch this level here and project it forward, so here's the level, and I want to see it open and then trade down to that level and then create a candle that runs up into this swing high. Now, admittedly, I was expecting this entire range to fulfill over the course of the morning session, consolidate during lunch, and then run up into that level here during the PM session. I would have been back in the last hour or so to show you an example of that being right now. The market decided to do it all before lunch. So we saw the market rally up, obviously, and we want to see if it can have the ability to get through all of these levels here. This fair value gap high, consequent encroachment, rejection block, consequent encroachment, and then finally into the buy side liquidity here. So there's thresholds, okay, that levels each time the market goes higher, we're measuring whether or not it has the potential, momentum, energy, you might refer to it as trend. Does it have the likelihood to reach through those levels to get to liquidity up here? Now, if you look at the fair value gap I've outlined here from this candle's high and this candle's low, extending out time, you can see we dropped down into that last week. Had a nice energetic run away from that on Friday, leaving a fair value gap here, trading up into that, ramming it through, and then reaching for buy side. So with this logic in mind, I want to take a look at the intraday charts, because that smash above that 40.35 level was just brilliant today. That concept is my power 3. I internalize the daily range like this. So I'm looking for an expansion to liquidity or an imbalance above the marketplace if I'm bullish, or an expansion to the downside to a old low or an imbalance. So those are the two main decision points that you have to make. Are you bullish? Okay, if you're bullish, what's it reaching for? An imbalance or an old high or relative equal highs? That's very simple, folks. Very, very simple logic. If you're bearish, you're looking for the opposite. You're looking for the market to trade down to an old low or relative equal lows for sell-side liquidity, or it's reaching down to an inefficiency, like fair value gap, something to that effect. Very, very simple. So right away, you decide does it want to likely go higher. And if it's going to go higher, you're looking for it to go to one of two things: inefficiency or liquidity above old high. If it's likely to go lower, you're looking for one of two things: it's going down into a fair value gap for inefficiency to reprice to that, or it's going to run out below an old low or relative equal lows for sell-side liquidity. That's it. Those two major questions, bullish or bearish, either or, then it's inefficiency or liquidity. That's the algorithm. That's what it's doing. So once you determine what it's likely reaching for, it helps you formulate the narrative, which is using this mindset here, what I was expecting to see over the course of the daily range. You formulate your engagements based on price action and the PD arrays that form in lower time frames. So the daily chart here, we have the rejection block here at 40.55 and a quarter. The old low, this is what we just referred to, at 40.35.25. And then here's the consequent encroachment of that wick. As I mentioned last week, it opens, trades down to it here, and then rallies, expands up through the high there, and even reaches all the way over to the rejection block. Okay, so I'm adding this in here. Admittedly, I didn't expect to see this today. I was just thinking this would be the daily objective. And if we were going to stop short of that 40.55, I would have expected that tomorrow or overnight, and I would have mentioned it today in this commentary. But it decided to do it all in one day. All right, the hourly chart. You can see the buy side liquidity, relative equal highs here. We have consolidation. Market leads consolidation, trades down to smart money reversal, low risk buy, accumulation, reaccumulation. Now this right here, this area here, is a little tricky. And I mentioned this morning that we hadn't really done much overnight, and we wanted to see it trade to the 9:30 opening. Admittedly, I was looking for it to drop down into this area here and then do everything you're seeing here, but not to the 50 level, but to the 40.35 right here. I wanted that liquidity taken out in the PM session. Because we consolidated overnight, and we already ran above the short-term high here of relative equal highs. See that? This high and this high here? It runs above it and then drops just a little bit below that low. In my opinion, what I was looking for is a little bit deeper run below that after 9:30. And we'll look at that in a moment when we get into lower time frames. But for now, I want you to just consider how this was just really narrow and not much of a deep retracement below that low. So it was too much of a consolidation for my liking. And it was problematic for me to just go in and go long. Now, had it done a deeper drop below here before 9:30, I would have went in a little bit more aggressive and went long on ES, when I'll show you when we get into lower time frames. But because of the fact that we had consolidated almost sideways perfectly in such a small little shallow drop below that low, I was unwilling to take any position. So I took no trades today, absolutely nothing. And that's fine. But the point is what I was looking for hinges on the fact that we were not willing to go down a little bit more than we did. So when I get students ask me all the time, when it comes to missing trades, do I miss trades? Yes. Yes, in fact, I miss a lot of trades because there's a lot of trades that I may see forming that I'm not interested in pursuing or participating in for various reasons. I may not be able to manage the position once I get in it, be preoccupied with something. My wife or my children draw my attention away from the marketplace. I don't feel well, I'm tired, or I'm just simply not interested, and I just want to watch and see what it does. So it's a wide array of things like you're going to encounter as a trader that keeps you from taking a position. But I was watching it live today, and I was mapping out the 5 and 1 minute chart and annotated them and sharing them on my Twitter feed. Now, I'll let you go look at those charts. That way you can drop the charts or the links from those tweets right on your trading view chart on a 1 or 5 minute chart. And you'll see exactly what I'm making the comments and what that chart looked like from my end. So you can kind of like match it up. That's the work. A lot of you aren't going to want to do that. And that's unfortunate because you're going to miss the opportunity to learn a lot. I'm doing it this way until we start our live sessions because obviously it'll be a lot better when you can see me talking about very specific things in the chart and what I'm looking for real time and more dynamically. And I'll be able to say it easier and faster than annotating a chart, cut and pasting it into Twitter, and then waiting for that delivery to get to your phone or device. So, but I'm doing it to keep you engaged, do your own studies, go into your charts and mine these things that I'm showing you. So anyway, we're going to look at this consolidation here on the lower time frame. Here is the 15-minute time frame stretched out a little bit more. You can see that low and this low right here. There's a fair value gap right there. This is what I shared on Twitter, this one and this one here. Okay, and I mentioned that I favor this one. Now, I don't believe what I'm about to say is going to be hard to understand because if you're a student of mine, you already recognize what this is. Original consolidation, distribution, redistribution, smart money reversal, low risk buy, accumulation. Somewhere in here is going to be reaccumulation for a market maker buy model that clears out the original consolidation. So I'm looking for this to drop down for a second stage reaccumulation. So some kind of an important low will form. And I was willing to wait for it to drop down into this. I was preferring it to do that. The times that I do those types of forcing the market to come to me type event, I run the risk of missing the trade. And that's okay, because I'm going to show you how eventually you see in my tweets that I flip right into what I'm looking for still, but anchoring it to a breaker with a fair value gap inside of it. So we'll get to that in a moment. But I was wanting this first. I favored this trading to first, then using that as a springboard, running up into this area here. And then I would have been hopefully seeing it consolidate or retrace away from that, going into lunch, noon hour to 1 o'clock New York local time, and then resume going up, for another leg higher. The fact that it delivered all in one complete swing like that, it was fun to watch, but it wasn't enough for me to participate in because it had already delivered the lion's portion of the move. If you look at the 15-minute time frame here, I'm really zoomed in so you can really see the fair value gap. And at 9:30, I wanted to see it spike down into that, clear out the sell side here, which would have been great because we had this low, and the fair value gap. So if it would have punched down into that, I would have went long right in that stab of this fair value gap on its own. By itself, I would have done that. I would have no fear in doing that because I felt strongly that 40.35 and a quarter level was going to be targeted today. And I wanted to see the initial objective, this fair value gap here, which was 40.12. I think it was and a quarter. So 4012.25. But we'll just say 4012 for the sake of argument. And the market rallied, just kept pressing up into that after having a little bit of a sloppy open at 9:30. Ultimately delivering up to the 40.55 and a quarter level, which is the old rejection block on the daily chart. All right, on a 5-minute chart, you can see we have buy side here. So there's buy stops above these relative equal highs. Retail traders are going to see that as resistance. So they'll think that it's safe to go short, and their stop loss they'll use to protect their position while they're short will be placed right above here. Sell side liquidity relatively equal to one another here. So sell side below there. So the market runs up, takes buy side one more time, punches it, and drops all the way back down. And then this tiny little shallow run right below there, that was enough to send it going the other direction. Now, immediately I was watching, and we had our first snow. It didn't accumulate anything, but it was beautiful seeing these big golf ball sized snowflakes falling down in Maryland out back of my house. And I was watching this buy side imbalance, sell side inefficiency, which is a fair value gap, but it's lacking what? Sell side delivery. So we see this market drop down. See this candle here? Its low is lower than this candle before it. And the next candle after it has a higher low. So we have a low with a higher low on either side of it, a swing low, inside of a buy side imbalance, sell side inefficiency, after a shift in market structure, after a...
I haven't yet. I'm giving it time. I'm giving it time. I'll give it like at least like a month maybe. Like I'm in no rush. I do think it will come to me, but I'm not gonna try to force myself into anything. What's good, AB? What time zone? I'm in Mountain Time, so it's like 4:45 a.m. for me. 4:45 for me right now.
Hunt of sell side liquidity. That's institutional order financial control. It rallies again, creates another imbalance, drops back down into it here, rallies after creating this fair value gap there. It's stalled there. I want to see it go above that and accumulate and build more of a support area. And the market rallies up to 4,000. We got 4,000. I mentioned that on Twitter, and then it broke down. And I had this volume imbalance and this volume imbalance annotated, and I was wanting to see it support that. And the last line of defense was the order block. We just kept eroding down into it, and then finally, post 9:30, we had one more drop down into this fair value gap, and I wanted to see it go through here and then spike down to that. That's what I was looking for. I would have been preferring that based on the hourly chart and the 15-minute time frame, because that would have wiped out all the sell side, because this is too shallow for my personal tastes, and it just never gave me the opportunity. So we can be upset. I could sit here and give you all kinds of complaints and such, but I can find a trade every day. It's not a big deal. But the one I was really wanting was for it to trade down to there. And that's what you're going to see sometimes. When we're doing the live sessions, I'll have a more preferred setup that I would rather get involved in the market with. It may or may not give it to me. If it doesn't, I'll show you ways to still participate in the marketplace with, which is what I showed today. And let's go into that now. This gap in here, be mindful of that because I mentioned it on Twitter. This is going to be referred to as the red fair value gap. Okay.
I would agree.
So I was saying, watching this fair value gap.
9:30-11.
And if I'm bullish, what I like to see is a PV array that fails and it becomes an inversion level. And what do I mean by that? I'll explain in a moment. We have this up close candle, the last up close candle, and this swing high before taking out this low here. So that green candle, that's what I'm highlighting, that yellow rectangle one. That's a bullish breaker. It trades above it, takes out liquidity, and then trades down below that low, takes out liquidity. That is a highly manipulated market environment. This is what I meant by saying it's sloppy. this could have very easily went into seek and destroy for the rest of the afternoon and never have gone above this high or below this low. It just could have went back and forth chopping and taking out every little short-term high and low. The fact that we dropped down into this fair value gap, again, took out sell side, rallied up. At this moment here, I said it has the framework for the shift in market structure here with the fair value gap. If it's going to hold, it could have wilted and took out the 39.84 and 39.82 sell side. So I was commenting on that because that was what I was having in my mind as a potential scenario that I would prefer to see. I wanted to see that. And it was not willing to go lower. And then finally went right back up into the breaker. Now you're probably thinking, well, why isn't this a breaker? This low to this high and that low. It is. But I cut through candles. So I'm going back to the original breaker here. This was a stop hunt on top of the breaker that originally was formed here. I'm going to go back to the original breaker when it happens. There's logic right there. I'm sorry, but you folks that are trying to teach my concepts, you don't know what you're doing. So please stop. You don't know what you're doing, and you're spreading misinformation, and it's unfortunate because it isn't going to work the way you're doing it. Okay, so it is what it is. Breaker. So we're back inside that range. I don't need it to go above and come back down. I can accumulate inside that breaker, especially if you look real close, there's a small little fair value gap right here.
Yeah, I got you. I will later.
So we went down, and I mentioned this looks like it's a raid on stops.
Bro, I know.
And the only thing I see now is a bullish breaker and a run to 40.12 when it was forming right in here. Right there, as it was dropping down into that, I was telling you in Twitter that 40.12 is the only thing I can see now. And that was a stop hunt on sell side there. So back and forth in here, we were collectively watching together and looking for a scenario. And I was leading your attention to if we can run out 39.84, 39.82, because that would do what? Take us back down into 39.82 and a half, which is the consequent encroachment midpoint of that gap on the daily chart. Remember how I first started this presentation? I took your attention to the daily chart and that big long wick below the daily candle. And I split it in half and projected it forward. And I was watching that level. Well, it had already went down to 39.82 and a half. It had done that. But I want to see it do it one more time and take out liquidity a little bit more pronounced after the opening at 9:30. But the market just simply was not willing to present that. And it was unwilling to go lower, completely repriced all the way up to the top of the breaker. Perfect delivery. Perfect delivery. Then we went down into what? Boom. There's that gap, that red fair value gap, if you look at my Twitter. I'm cutting through candles, folks, okay? I'm not supply and demand, okay? There's nothing like what I'm teaching you. I do not ignore or forget about an imbalance. Once it's traded to and rebalanced, that's logic. That's narrative, okay? This point right here was before the 9:30 opening. It was part of the narrative I was looking for. I wanted to see this be reused in the future because the algorithm's going to remember this imbalance. It's not going to look at this high and this low and say, oh, well, this no longer matters, like anybody else that would be familiar with inefficiencies. So the algorithm's going right back into this. The market drops down into that fair value gap. That candle's high. That right there is what I was referring to. Watch and see if it offers what? Support. Go back and look at the tweets, folks. That was not a miscue. It was straight up, right out of the logic I teach my students. I'm taking your attention to this fair value gap, and if it goes above it, it comes back down and acts as support. Then we have a narrative that we can trust going forward. So now we are now bullish, looking for what? The 4,012 level. Then we have to have an entry pattern, right? Well, we're inside of the breaker. And then we have a fair value gap right down here. Look at the bodies of the candle right there. Closing price nails the high. That's perfect. It overshoots a little bit. That's fine because that's an order block. Down close candle. Perfect delivery. But that body stopping dead in its tracks inside that fair value gap right there. And then off to the races we go to 4,012. Here's that fair value gap again. Market rallies up into 4,000, expands through it, consolidation, creates another fair value gap in here. Between 950 and 1010, there's a macro. There's going to be another little short order of instructions for the algorithm to seek another setup, either to reverse or continue. You see the fair value gap here? In 1010, there's a macro. There's going to be another little short order of instructions for the algorithm to seek another setup, either to reverse or continue. You see the fair value gap here? Trades down until here, accumulate, reaccumulate, sends it to the top of the fair value gap on the 15-minute time frame to 1750, and then back down to consequent encroachment, which is the midpoint of that shaded red area. It may not be red for you. I don't think it's pink, maybe salmon colored, I don't know. But half of that consolidated, accumulated more, rallied outside of it. Here's that area here. Rallies again, consolidates. Then I mentioned as long as we remained above 40.12, that we would see 40.35 and a quarter. The market rallied right up into that. And then I sent a tweet saying to screenshot your 1 minute chart as we delivered what we were looking for. The market pressed on into 40.51, retraced, consolidated, dropped back down into that old 40.35.25 level. It's an old daily high, consolidated. And here we have the lunch hour between noon and 1 o'clock in the afternoon. Now I'm seeing some folks, they're warming up to the idea that the markets are algorithmic. That's wonderful. But they are sometimes saying that algorithms don't go out for lunch. They don't take lunch. The algorithm doesn't take a lunch, but the algorithm reflects on price action inside the lunch hour. And there is a consolidation most times in the hour between noon and 1 o'clock. That's what we're seeing here. Okay, so we've been bullish. And I've taught this in the 2022 model last year on my YouTube channel. If we get a retracement or a reversal in the afternoon session, it's going to aim for the lows formed during the lunch hour. If you're trying to continue going long, and we haven't reached an objective, which unfortunately we do here, at 40.55 1/4, that level was the old rejection block from the daily chart. Again, what I mentioned in the beginning of the video. We'll cover this in a moment here, all that business, but the sell stops below this relative equal low. Once we went to that objective on the daily chart, any retracement lower is going to attack, yes, the lunchtime lows, and the algorithm reprices down to it here, and all the way back down into a fair value gap there, and back into our 15-minute fair value gap that was given as the initial upside objective, range high of 40.17.5 to 40.12 1/4. That's that area here. And it does it perfectly. Stops dead in its tracks, right to the tick, closing in that fair value gap with a bull shoulder block. Nice little reaction here. That's 5 handles right there, offered beautifully. A little bit more than that, but you know, who's counting, right? So that lunch hour sell side liquidity pool was the draw after hitting the rejection block. And I took your attention into, if you're on Twitter, I took your attention to right in this area here. So the old daily rejection block is that 40.55 1/4 level, and we have an old high. And I told you I would teach you a model tonight. If I'm bullish and I see an objective I'm looking for, in the case 40.55 1/4, which was the old closing price on the daily chart. When we showed the daily chart in the beginning of this recording, again, go back. This is why you want to take notes, because you're probably frustrated right now. You're thinking, what are you talking about? I've talked about it. But if you just casually watch the videos like it's Netflix, you're missing the opportunity to get key levels that are going to be pertinent the next potential week or so, or maybe even longer. Remember, I'm looking back 20 days. So these key levels, much like the 39.82.5 level was the key level last week, it was key level today. So if I'm bullish and I'm expecting price to reach to a specific level higher up on the higher time frame, and we've taken out a high, like we do here, and we have yet to trade to the higher time frame objective, and we're past lunch hour, I will look for a fair value gap like this right at the old high, and we have it there. This rally up falls short of the rejection block, and it drops back down into consequent encroachment, which is the midpoint of this candle's high to that candle's low, that range. If I'm bullish and I'm expecting price to reach to a specific level higher up on the higher time frame, and we've taken out a high, like we do here, and we have yet to trade to the higher time frame objective, and we're past lunch hour, I will look for a fair value gap like this right at the old high, and we have it there. This rally up falls short of the rejection block, and it drops back down into consequent encroachment, which is the midpoint of this candle's high to that candle's low, that range right here. This fair value gap is categorized as a BISI, buy side imbalance, sell side inefficiency. What's it missing? It's inefficient in what? Sell side. So we're expecting at a later time, which it does here, the market being offered in a down candle, and stops dead in its tracks right in the midpoint. That's a long 5 handles from here to here beautifully. Once it does that, and it hits the rejection block, or it could have been an old high, at that moment, then I'm going to be watching for a potential reversal. This swing low, it's broken there. That's a potential reversal. Expect this to sell off aggressively and then go back through the gap that forms at the old high. If you get this breakthrough here, the very next selling opportunity, you want to use that, because this is going to be a very sudden breakdown of a market maker sell model. And it's going to aggressively reach for, in this case, the lunch hour lows here for sell stops. So we have the meltdown through that fair value gap. It does it here. And watch what happens. It goes right back up to it. There. That's your short. That short right there. You put your stop loss right above the high of the fair value gap that's formed here. This one extended in time. That right there is what the algorithm is going to refer to, that one. This fair value gap right there. And you want to see it leave some of that open like it does. In the next candle, look what it does. Boom. Undeniable. Now, some of you are going to think, there's no way. It's all hindsight. Go on my Twitter. Go on my Twitter. And I had it mapped out right before it reverses. And then I took it down into a 15-second chart, looking for 40.38 liquidity in here. And then boom, it hits it. And everybody else knew exactly what to expect next, which was the 40.35 1/4 level to be traded back to. And then, because you're used to being with me, well, what's over here? Relative equal lows. But some of you forgot the best